Welcome back to the money experiment. China has been openly selling US Treasuries and rapidly reducing its holdings, and almost nobody is paying attention. But this shift is extremely serious because this is not just a China issue. This affects global money and eventually it affects your daily life. In this video we will break down what happened, why China is doing this, what this means for the next financial era, and most importantly, what you should do in this turmoil. China once held over $1.3 trillion worth of treasuries at their peak in 2013. Today, that number has fallen to around $700+ billion, the lowest level in more than a decade, and still falling month after month. Meanwhile, Japan now holds more treasuries than China and is currently America's largest foreign creditor. This is not normal rebalancing. This is a major nation slowly stepping away from the very foundation of the US financial system. The real power shift is not happening in the stock market. It's happening quietly inside the bond market, where nations fund nations. And when the demand for US Treasuries changes at this scale, the balance of global power begins to change with it. After joining the WTO in 2001, China became the world's manufacturing base. Dollars flowed in from exports, and like Japan did earlier, China recycled those dollars into US Treasuries. It was safe and rewarded by the system. After the 2008 global financial crisis, this accelerated even more, and China's holdings peaked around $1.3 trillion in 2013. Then the unwind began. In 2015, China defended the yuan during the market shock, and sold treasuries to support the currency. In 2018, the US-China trade war shifted the relationship from cooperation to strategic rivalry, and after Russia's reserves were frozen in 2022, China clearly saw that foreign reserves under US jurisdiction can be weaponized. From that point, diversification was no longer optional, it became national security. This is how holdings gradually fell toward the $700+ billion region today. China isn't selling because they're desperate, they're selling because they're preparing for a different financial future. These are the three primary strategic reasons. The world is shifting toward a multipolar financial system, not a USD-only world. China wants to reduce dependency on US policy and protect itself from external weaponized finance risk. China wants to reallocate capital into its own future industries such as semiconductors, EV, batteries, clean energy, and AI infrastructure. When China sells US Treasuries, it pushes the price of those bonds down. And when the price of bonds goes down, the yield goes up. This is the part most people still don't see clearly. China stepping back makes it more expensive for the US government to borrow money. It eventually becomes more expensive for everyone. Businesses, consumers, housing, credit markets. This selling pressure is like gravity pulling interest rates higher. We are entering a more distributed, multipolar financial world. The USD will still matter, but it won't be the only center anymore. So instead of fear, position yourself correctly with these 4 steps. Don't assume low rates come back easily. So borrow cautiously. Hold liquidity and roll short duration T-bills. Warren Buffett is sitting on record cash and rolling short-dated treasuries. It's worth paying attention. Diversify globally. If the world becomes multipolar, returns won't come from just one nation or one currency. Focus on real productive assets with pricing power, energy transition, advanced manufacturing, infrastructure, AI build-out, strategic metals. Don't wait for the headlines to confirm the shift. By the time the world sees it, the capital has already moved.